Welcome to Wednesdays with English with a Twist, otherwise known as EWAT. Hi everyone, this is Shanti Kumaraswamy Street, calling from a super sunny London, and it's just lovely out there. I hope you like my my daffodils. I've got them out, and you know, they're looking lovely. I hope, although they've been there almost a week, so maybe not so good. But anyway, hey guys, today is lesson 20 of Wednesdays with EWAT. Can you imagine 20? We've already got to this great milestone. I am so thrilled, and I hope you're as thrilled as I am. Well, let's hope so. Anyway, like I always ask you, I've seen a couple of people already join. Hi Roberto, and you know, do let me know where you're from. Say hi. I hope I have some regulars coming into this class today. Just tell me where you're from, what time it is. Vasiliki, long time no see. So great you could join us. I saw that Rosie joined, Roberto's joined, and hello. And so lovely to see you guys. You know, just come on in. So today we are the 5th of April. Can you believe it that it's already April? I know I keep saying this every time we have this class because I can't quite believe, you know, how you know, sort of fast time goes. Romina, you've just said, so sorry, I have to leave. Oh, okay, you've just arrived and you've got to go? I'm sorry to hear that. But listen, don't worry, this lesson is going to be recorded and uploaded to YouTube and onto the Facebook page. And if you subscribe to my blog, you'll get it in the weekly post. So don't worry, I'm sorry you can't be with us, but don't, never mind. Hello there, Umar. Hi from Malaysia. Great. Whereabouts in Malaysia? East Coast, West Coast? Where are you? Because my family are from Kuala Lumpur. So that's where we are. So Vasiliki is saying that next Sunday is Orthodox Easter in Greece. Is it the same time as us? When you're saying next Sunday, you're talking about this coming weekend or the following weekend? Because Easter for the non-Orthodox Christians, it's going to be on the, let me just think, is it the 16th of April? So, you know, so you'd let me know. I'm curious. Anyway, hi guys. So keep coming in, keep saying hello. And now I have, this is a packed class today, packed lesson because I've got tons and tons to cover with you. I know that, and the main theme is taxes. I know, not the most pleasurable of topics, but hey, we have to do it. Hi Dan. Vasiliki, so great. So the Orthodox Easter is being shared at the same time. That's going to be great. I'd love to know more about that. So we're going to have Easter eggs the same way, and Easter chocolates. My mother's coming over for Easter, and in Italy at Easter we have the colomba, which colomba is Italian for dove, and it's a lovely cake which is similar to a panettone which we have in Italy, and we have it at Easter. So the colomba. So my mother asked us, do you want an Easter egg or do you want the colomba? And we chose the colomba because it's easy to do that. Dan, you just told me that Passover starts next week. Okay, so Passover for the Jewish. Okay, well, it's really busy next week. Sounds good. Okay, now come on, let's go back to business here. We are talking tax, but first of all, I have a few announcements I wanted to share because it's been a really exciting week for me, and I just wanted to share and thank you above all. First of all, I just wanted to say that you remember my book, Small Talk to Go? It's all about small talk in business and how to engage and how to feel more confident and relaxed when you're engaging in small talk in business. Remember that book? And some of you have bought that book, so I thank you so much. Some of you may have noticed it, not too sure whether to buy yet. Anyway, what I wanted to say, I was just so thrilled that this week in Glasgow, Scotland, we have the International Association of Teachers of English as a Foreign Language conference. It's this big conference that is held every year in the UK. And on Monday at the Business English Special Interest Group, one of the speakers actually mentioned Small Talk to Go. And it came under he was talking about materials and innovative materials that are created for business English learners and teachers. And surprise, surprise, Small Talk to Go was mentioned. And I'm really honored and really privileged. But I wanted to share this here with you because I wanted to say a big, huge thank you to all of you, because you're the ones who inspire me to write and to publish. And I started into the self-publishing world because of yourselves. So thank you so much. And Vasiliki, I'm missing IATEFL this year. I had to make a choice. I hope to go to the conference later in the year for the business English. But I want to say thank you so much, and I really wanted to share this with you guys. Another book, another thing I wanted to mention today is that my other book called Business English Secrets, I've just added that to my website and to my ebook store. And that book also got mentioned today in another talk by another fellow teacher. So really thrilled. I will be talking a bit more about that book, also to give you a bit of an idea of how you could use that book to help you become much more confident communicators in English with work. So that's it. So I just want to say those two things, two big thank yous to you, and I'll be sharing with you a bit more about Business English Secrets. Now, the other thing, I've got a lot to talk about today. Another announcement I wanted to make to all of you is that from, last week, but from now on, my weekly lessons that are delivered directly to your inbox when you subscribe to my blog will also come with an audio version of that post. So it's what they call blogcasts. So blogcast stands for a blog plus a podcast. So I have decided to add an audio version of the blog. That way you can practice your listening skills whilst reading the blog. And now I want to say thank you to my brother, who's a marketing guru, and he was the one who's been, I have to say, nagging me about video, audio, and he said to me, why don't you do that? Why don't you add an audio version? I tested this out last week, and I would be really interested from now on if you subscribe. Yes, Marie Grace, good answer. It's time to subscribe to my blog and also get your free e-guide. Don't forget to get that. Because you will then be able to listen and follow the transcript. So you get the best of both worlds. Also, if you don't have time to read, you can at least take it and listen, because the audio version is uploaded onto SoundCloud. Yes, I will introduce my brother Roberto to you, Vasiliki. No worries. Sorry, I'm doing a bit of promoting here in this lesson. So definitely that's going to be the audio version of my post, and eventually I'm thinking of launching an audiobook. So do let me know what you think, because if it's something that would appeal to you, particularly as you're busy professionals, and I know a lot of professionals prefer to listen while they're doing other things rather than just sitting and reading, then that is something that I'm going to be doing. But I will be sharing more with that later on as we go along. Okay, so that's it. Those are my announcements. And before we start this lesson properly, I also want to remind you, for all those of you who haven't done so yet, if you do want to read my blog posts and listen to them, then don't forget to subscribe to English with a Twist by downloading that e-guide, and also that will give you access to my free weekly lessons that are delivered every Friday directly into your inbox. You will also get, obviously, these lessons, Wednesdays with EWAT, which are normally added to as a recording to my classes, to those posts. So come on over and join the EWAT community. It's getting bigger and bigger, and so I'm really thrilled. I'm nearly to 6,000 subscribers, so if we can get there, I'll be thrilled. All right, guys, any questions? If you don't have any questions at the moment, let's get started with today's lesson. And it's all about tax. Right, I have actually written 2 posts about this. And they will be added to this audio, to this recording later. So you'll get to see what I'm talking about. Now, why did I talk about tax? Some of you will remember that my background before becoming a business English trainer was in finance. And I was involved in investment sales, and I was also involved in financial advice. And one of the areas that I got involved with when advising clients was looking at also their tax situation, their tax areas, and advising them on what's the best way to reduce their tax liability and how they could save tax. Now, so that is also an area of my expertise apart from investments and the financial world. And tax, let's face it, is something that most of us cannot escape. Like I said at the beginning when I advertised this, that there's nothing more certain than death and taxes, and we can't escape taxes. Unless you happen to be part of that group of super rich people who can afford an incredibly expensive firm of accountants, who then find some incredibly sophisticated ways for you to avoid tax, which is legal in a lot of countries. Sometimes, though, if you evade tax, then it means that it's illegal. Because if you evade tax, that is illegal. But you can avoid. There are lots of plans and schemes that allow you to avoid tax by reducing your tax bill. So, and we can't, most of us can't, ignore our taxes. Now, why I mentioned today in particular, and why I wanted to share it with you, is that here in the UK, our tax year, also known as a fiscal year, and I'm talking about individuals and self-employed people, our tax year ends today. So it's the 5th of April. So our tax year starts on the 6th of April, ends on the 5th of April. Let me know what about in your country? As individuals, when does your tax year start and when does it end? I'd love to know. Now, let me distinguish. You have individuals and you have got businesses and corporations. Now, individuals will pay income tax. Businesses will pay corporation tax. So, you all have different names in English, in your country about the different taxes. Now, some of my clients say to me, Shanti, why do we need to talk about tax? Well, as I say, if you can't escape tax, it's a good idea to be able to discuss tax situations with people. And often you have to exchange information. So it's useful to know what words you use, what expressions we need to use when we're talking about tax affairs. In the 2 posts that I'm going to share with you, I've actually highlighted some of the words that are relevant to tax and also some of the expressions we use. So don't worry if you don't, you can't quite follow, you don't think you'll remember these words. They will be in the post that I share. And I've also recorded them as an audio version, so you get to listen to them too. So you just get used to the words that are being used. So I've got a sort of fairly organized way I'm going to cover this today. Now I'm going to look at predominantly individuals, how we are taxed. And I'm giving you an example of what happens in the UK, which is of course the tax regime that I understand most. And the reason I was saying, why I find it interesting and why I think it's important for you as business English learners to understand is to be able to share with other people. For example, when I go to Italy and I go and visit my mom, or I go to Malaysia to visit my father and my brother, the conversation then might be about tax. We're talking about taxes, what's going on in that particular country, and it's useful to know the words. For example, in Italian, I often lack the words, the expressions that are used to talk about it. So I find it really useful, and if I were wanting to learn to express myself more and communicate about tax in Italian, I'd want to have those expressions. And similarly, I believe that in English, it is worthwhile knowing this. So that's why we're doing this. So let's start, okay? And I'm taking my experience as a financial advisor on what I did. I'm sorry, Rosie, you're saying that your connection's not very good. You keep losing me. Maybe do you want to try it on your computer? Maybe that could be easier. I'm so sorry, but there will be a recording and you'll get to hear it later. Sorry about that. Right, okay, so let's look at this. We're going to look at the individuals. I'm going to look at individuals. Now, when we talk about individuals, we have two categories. We normally have employees employed by companies, and we have the self-employed. Self-employed being that you do not have an employer. So employees and self-employed. Now, an employee typically works for an employer, a company, and you get a salary. You receive a salary. So what happens normally, particularly in the UK, so I'm only talking about the UK, is that employees are paid through, they receive a pay slip, and they're paid through what we call in the UK a PAYE system. Pay as you earn. So what happens is that your employer will pay you your salary, your monthly salary, and you receive your salary and where tax has been deducted at source. What do I mean by that? What I mean is that the employer, your employer, has calculated the tax for you, deducted that tax, and has paid you a net income, a monthly income. So we have gross income, which is income before tax, and we have net income, which is income after tax has been paid. So as an employee, every month you receive your salary, it will have been taxed at source. So you don't have to worry. You know that that's the money you can spend. Excellent. By contrast, a self-employed person, so the self-employed person would be someone like a freelancer, and Vasiliki just mentioned it. Freelancers, consultants, a lot of companies, I shouldn't say companies, so a lot of businesses set themselves up as freelancers. A lot of teachers, for example, are freelancers. So what happens as a freelancer is that you charge for your services. So, for example, if I worked in a language school, I don't work as an employee of that language school. I work as a freelancer. So some schools I will then charge for my services and then they pay me. So, for example, as a freelancer, Julia, you just said here in Indonesia, yes, the company has already deducted, not your salary, they have deducted the tax from your salary. Because I hate to think they're deducting your salary. They're deducting the tax. So what you receive is your net income. Self-employed, by contrast, for example, let's take a freelancer, and a lot of freelancers, for example, will charge a fee. I charge a fee to my clients. What I do is I send them an invoice. I say for this, that's what they're going to pay. I receive the money. So all the money I receive is received gross. So gross, which is before tax. And what I have to do is I've got to add up all that income, and at the end of the year, I have to declare that income. Now, when I declare that income, then I have to calculate how much tax I owe. Now, as a self-employed person, I can also take into account all the expenses I have incurred as a freelancer, as a business. And I can then deduct those expenses from this gross income. So, for instance, if I earn £30,000 in a year, in this fiscal year, then, and I had expenses of around about maybe £8,000, I can deduct those expenses from that gross figure of 30,000. And once I've deducted that, then I can use the net amount and calculate my tax from there. So, you know, a lot of businesses can deduct expenses. So for self-employed people, you have a lot of expenses that you can claim against your income. So these are all words that you'll hear, and you'll see it in my posts where I'm talking about you incur expenses, you can claim against an expense. And that's what happens here in the UK. And I think pretty much in a lot of countries where self-employed people can. Yes, Eliza, you've said net taxable income. Brilliant. So once you deducted that, then you look at your net income that is taxable. So then you're going to be taxed on. So here we are. So I've got my business expenses, I've deducted my income. So I hope everybody is clear on this. I'm getting some good information coming in. Gross income, net taxable income, lovely expressions and words. Thank you so much. That's great. Now, I know this could be particular to the UK, but let's see. Now that I've got my gross income, I've worked out the expenses I've incurred as a business, and there are many expenses I can claim against. For example, if I buy a new computer, my ongoing telephone bill, all this sort of thing, you know, you can deduct. I have an accountant, so my accountant can tell me what are certain expenses that I can claim against. Dan, you saying that it sounds pretty much the same in the US. I think it's pretty much the same throughout the world in most countries. So I know some people say to me, as self-employed, we have a lot of expenses that we can claim against. So, you know, we have a lot more flexibility. Obviously, the downside is perhaps our income is not as regular, you know, because it fluctuates, our income fluctuates. But it depends because some self-employed people maybe have contracts. You have a project, and so then you have a project that lasts for 6 months. You are paid for that, and then you can deduct all the expenses against that. Faten, thank you so much. You just said this is a great video. I'm so pleased. Thank you. Right. Okay. So I got this, and now I'm going to work out what I'm going to do. Now, in the UK, to work out the tax I've got to pay, in the UK, we have what we call a personal allowance. All UK taxpayers have a personal allowance. Now, what does that mean? A personal allowance means that I can earn up to a certain amount each tax year, and which is tax-free, free of tax. So the first so much I earn is free. I know this is incredible because I don't know whether there are many other countries that allow it. So for example, in the tax year 2016-2017, which is the one that's just finishes today, the personal allowance for all individuals was £10,000. So for the first £10,000 of my annual income is not going to be taxed. I get that personal allowance tax-free. Brilliant. So remember that example I gave you of 30,000? I can take that, deduct 10,000 from there, and then we're only looking at 20,000. Now don't forget, from that 20,000, I can then deduct my expenses, because expenses are not deducted from my personal allowance, they are deducted from my taxable income, as was mentioned before. Elisa, you just said there's a personal allowance. here also in the Philippines. Great, good to know. How much is it for this tax year? I'd love you to share that with us. So we have this personal allowance. So first 10,000 is tax-free. Brilliant, wonderful. After you've done that, the next step is to decide whether you're going to be a basic rate taxpayer or higher rate taxpayer. So they need to work out what is the basic rate of tax and what is the higher rate of tax. So, for example, in the UK, the basic rate of income tax is 20%. Higher rate is 40%. Then the Treasury introduced an additional rate of 45% for the top earners. How do you decide? So I'd love to know, what is your basic rate of tax? What's your higher rate? And what is any additional rate if you have one in your country? So how do I determine whether I'm a basic rate taxpayer or a higher rate taxpayer? Well, what we do is you would introduce, what we have are income bands. Don't worry if you don't get all these words. They're going to be in the documentation. So you have income bands. Okay, so let's have a look. Now, for example, in the UK, anyone who earns between 0 up to £32,000 per annum. Don't forget, you're deducting that personal allowance. So you start from that 0 to £32,000 per annum per year. Then you are classified as a basic rate taxpayer. So you'd pay 20%. The higher rate tax band, so we call it a higher rate tax band, is between £32,001 to £150,000 per annum. So if your income is between these two bands, then your rate of tax will be 40%. You are then classified as a higher rate taxpayer. Eliza, you're saying 50,000 per taxpayer plus 25. Wow, okay, that sounds complex. So you're taking in the dependents. That's interesting. We'll have to see that. Francesco, you've got a question mark there. So maybe let me repeat that. So the basic rate income band is anyone who's earning between 0 to £32,000 pays 20% tax. 20%, that is their rate of tax. If their income is between £32,001 to £150,000, then they are higher rate taxpayers and their rate of tax is 40%. If you earn more than that, and so therefore if you earn £150,001, then your rate of tax is 45%. Don't worry about these figures. It's all in the post. You get to see that. So don't worry about it. This is just to give you an idea. I just want you to think of the words I'm using. Income tax band and higher rate, basic rate, additional rate. Because that's what we normally talk about in most countries. That's what typically most countries have when we're talking higher rate and basic rate. Vasiliki, you find that high? What, the 40%, 45%? Yeah, and sometimes it's interesting because I've spoken to a number of my clients, of course, who come here and they perhaps complain about it when in their country the tax rates are really high, and they think there's this idea that in the UK taxes are lower. And then they're quite surprised that actually our rate of tax is quite high. So, but I know there's other countries that maybe are higher. I know, for example, in some of the Scandinavian countries, the rate is higher. But then you have to compare to the sort of services they receive as a result of paying higher rates of tax. So here are our income tax bands. That's what we were talking about. Next up, we're going to look at tax liabilities. So once you've worked out your income tax bands, so you know how much tax you've got to pay, then you need to look at the tax liability. What does a liability mean? When you are liable for something, it means that you have to pay it. You owe money. So when we say your tax liability is what you owe. So you are liable for tax. So when we talk about that is what you need to pay as tax. So if you hear that or if you come up right that, it will say your tax liability. So as I say, with self-employed people, we can offset, deduct, offset our expenses against our income and therefore reduce our tax liability. Because of course, if we can reduce that income, it means the tax that is applied to that income will be lower. So that's great. That's what we would like to do, which is to be able to offset our expenses against our income. And this is especially important for businesses because most businesses, the whole idea is to reduce our taxes. In fact, I mean, that's what I want to do. I send all my receipts and all my expenses to my accountant. He calculates everything or she calculates everything. Then they send it to me and I have a look at it. And then I think, okay, great. So with all these expenses, it's reduced my tax bill. Now, it has reduced my tax bill. How? Because what I've done is I am declaring lower profits, a lower income. If I'm a freelancer, I'm a business, I'm going to be making profit. The lower my profit, the less tax I have to pay. Good news, isn't it? Because that's what you want. You don't really want to pay an awful lot of tax if you can. But there's a problem here, and I see this a lot also with my husband, who is a mortgage advisor. He helps clients get loans from the banks, because when you declare lower earnings, when you declare lower profits, it doesn't look so good because it doesn't really show you as a business that you are doing well. Because as a business, we want to grow. You want to steadily grow, increase your profits. So therefore, by reducing your profit, it's going to work against you. So a lot of businesses do have to accept that if they want their business to grow, if they, so that they can invest more in their businesses, then they're going to need to make more profit and consequently pay more tax. That's just how it is. On the one hand, I prefer not to pay too much tax. But if in one tax year, my profit looks lower than the profit of the previous tax year, it doesn't look so great. And here's why. Supposing you need to go and get a loan, you need to borrow money maybe for your business, or maybe you need to buy a house, and you're going to the bank or you're going to a lender. Now, as a self-employed person in the UK, what they need is, you see, if you were an employee, what you have to do is to show that you just show 3 months worth of salary, or you show your salary, and because you have a steady salary coming in, then that's fine. The bank or the lender knows that that this is what you're earning. As a self-employed person or a business owner, you have to show your tax returns. You have to show your profits. So often they want to see 3 years worth of accounts. When I say accounts, I'm talking about your business accounts, which will then show your profit and loss statement. If your business accounts don't look good and shows that your profit has been going down, a lender is going to say, well, you're not earning enough. You're not earning enough for us to want to lend you any money. Now, on the one hand, it's good that because if your profits are looking low, it means your tax bill is low. But it can also go against you when you want to borrow money, because the lender is going to say, well, you don't look like a very successful company or a successful business. You know, so it's a real balancing act in that sense, really. So as a business, we want to grow. We want to show that our profits are going up. It doesn't give a good impression, like Elisa says, for a business if their profits keep going down. So, you know, that's the problem, isn't it, with businesses? Of course, you could be one of those businesses that still does incredibly well and, you know, just keeps making money all the time, but actually has still got a very small tax bill. Why? Because they register their companies or businesses in what we call a tax haven. What's a tax haven? Well, a tax haven, a haven is like another word for paradise. It's where you're protected. It, you know, it has a feeling of, oh, it's wonderful. A tax haven, what we call, is countries like Monaco, Cayman Islands, Bermuda, the Bahamas, Luxembourg. Now, if you are one of those rich companies and businesses that registers your company in those countries, where basically you don't have to pay any tax. So you register the company there. The company is liable for tax in that country. I can make a ton of money. I can make huge profits year on year and pay practically no tax. How is that? Yep. Dan, who's based in Austin, Texas, has just said, yes, we have someone named Trump here who doesn't like to pay tax. Yes, I think he doesn't seem to want to reveal his tax returns, does he, Dan? Yeah, but there are also some very well-known companies who have registered their companies abroad in these tax havens. Now, who am I thinking? Can you think of any international companies? I can think of Amazon. I can think of, was it Starbucks? You know, but, you know, they register, they make huge amounts of money, but they don't pay any tax. Why? Because the company is registered in a different country where tax is nothing. Apple in Ireland, because Ireland has a very good tax system. And so, you know, there's some companies and high net worth, I mean very rich people, then can afford to go and register their businesses in those countries. So as I say, unless you're one of the super rich, most of us are going to end up paying tax, and we can't quite avoid it. But there you go. So I'd love to know what your tax regime is like in your countries and whether you feel it's fair. A lot of people don't feel that taxes are fair. But it all depends. It depends. I think we should all pay taxes. Unfortunately, there are countries where people don't pay as much tax, maybe because there is an assumption that they don't want to. But I think that if we want our services to be good in a country, then I think we should all pay our taxes. But yes. But there should be an equal treatment of that, and that's another subject altogether. Let's not discuss what is right or wrong. So up to now, I've been talking about direct taxes. So what I mean about direct is that we can see how our taxes are being deducted. Right? So our income tax, for example, you as an employee, you receive your pay slip every month, and you can see in your pay slip how much your employer has deducted the tax, and it's sent into the tax office, and you get your net income. Elisa says we avoid tax as much as possible. Yes, in Greece, you're saying, Vasilika, our current situation is that, yes, in the last few years, it's been very unfair. I think, let's talk politics here for a minute. I think you mentioned the middle classes. I think, yes, the super rich will always find ways to avoid paying large amounts of tax. The lower income earners, they have safety nets, and of course we have allowances, and they can also, they will pay fewer taxes. But I think what you end up finding is that people who are in the middle bracket end up paying a lot more. And then you also have the people who manage to avoid paying tax, which then ultimately means that the state, the government has to collect taxes from people, and so they'll find different ways to collect that tax. Unfair, I know, and this is where also we talk about indirect taxes. So we talked about direct taxes, so you can see what's being deducted from your salary, from your income, from your profits as a business. Then there are those indirect taxes. And so what do I mean by indirect taxes? Those are the taxes that a lot of governments will impose on us on goods and services. For example, let's take a look at alcohol, cigarettes, and luxury items. So cigarettes and alcohol, for example, in this country, in the UK, it's what we call duty. That's why we get the word duty-free and tax-free. So over the years, we impose, a lot of, the government has imposed a duty on alcohol and cigarettes. And governments will often impose these duty or this tax to try and discourage consumers from consuming that particular product. For example, cigarettes. Over the years, cigarettes have become, it's a health hazard, it's a danger to our health, and to discourage people from smoking, in the UK, they have steadily increased the price of a cigarette packet. So a packet of cigarettes now, for example, costs about, in the UK, £9.67, I think. It's unbelievable. And I think in Greece, the same packet of cigarettes costs about €4. And most of that is just in the duty. So the government is imposed on that. They impose a duty every year on wine, for example. So wine, the price of wine keeps going up, but it's not the producers that are charging it, it's the duty that's imposed. So it's an indirect tax. We don't see it because it's reflected in the price of what we're paying, of the product we're paying. Now, in Malaysia, for example, where my family is from, my brother was saying that the duty on alcohol. Now, Malaysia is a Muslim country, so they will impose a duty on alcohol to discourage their citizens from buying alcohol. So, for example, spirits, the duty is like, I don't know, correct me if I'm wrong, but 400% or something ridiculous of the price. So it's really expensive. I know that in Scandinavian countries, for example, because there's a high level of alcoholism in those countries, they imposed a very high tax on alcohol, and they're only available through state stores, shops, and so it's really expensive. By contrast, in other countries like Spain, Greece, Italy, wine is cheaper. So I can go and get a bottle of wine, and it's going to be a lot cheaper than in the UK. So those are what I call the indirect taxes. Vasilik is saying, yeah, they're €4.50. That's why so many British go to Greece and then they buy their cigarettes because it's so much cheaper. Gabriela, hi from Argentina. How are you? So glad you could make the class. So you've got these indirect taxes. So that is the duty imposed on alcohol, cigarettes, luxury items. We then also have what we call value added tax, VAT. I know a lot of you know about this because most countries have that. So you buy goods or you buy services and there will be an added tax Now in this country, in the UK, our value added tax VAT is 20%. So not everything. Food, for example, doesn't have VAT on it, but and books don't have VAT. But if I wanted to buy digital books, for example, there is VAT added to it. And also if you ever come to the UK and you go into a coffee shop and you buy a coffee, you order a cappuccino, a cafe latte, and often they will ask you, eat in or take away, or drink in or take away. Why do they ask you that? What's the difference? The difference is, of course, if you're going to eat in, the shop has to charge you VAT, value added tax, and so the price goes up. So it's an indirect tax that is being levied, another word, being taken from the price of that cup of coffee. Whereas if I take it away, then you don't pay VAT. Yes. So 12% VAT, Elisa, where are you at? And US has sales tax, which is state by state. Dan is saying, yes, in Texas, 8.5%. Yeah, can I just say about the US, I have to say that is one of the things that has always driven me mad. Because one of the things I never understood, because in the UK, where we have the indirect tax, the VAT is, I go to a shop and I buy a blouse or I buy a shirt or a pair of trousers. I look at that price. The price already includes the VAT in there. I don't know what it is. But in the US, I don't know if any of you have been to the US, but you'll see the price and you think, oh, that's great. Oh, no, nice. And then you go to the to the till, and you go and pay, and then you get this price, and you think, hold on, that's not the same as the tag that was on the trousers, the pair of trousers. And no, because they've added sales tax. And you think, oh, couldn't you just add the sales tax on that price tag? Because, that tax is not going to change that quickly. So that's one of the things, and I'd love to know, Dan, what you think, because that just drives me insane when I'm in the US, thinking, why can't you just add the tax so I don't have to worry? I know that's the price. Dan is saying, yes, one of our minor scams. All right, yeah, it just drives me nuts. But, like services, if I buy something, like this week we had our service alarm, our security alarm serviced, and of course you have a price, and then of course they have to add VAT on that. So then you see, okay, yeah, VAT, I've got to add that 20%. Great. Christina, hi, thanks for joining. Now, Abu, what did you say? Now we can know who smokes, who the smokers are from the price. I don't quite know what you mean, but maybe you can tell me a bit more about that. But yeah, so those are the indirect taxes that we get, and that governments will impose on us, which right or wrong, that's what we have. The clients suffer the most because of VAT. Companies can offset VAT from their tax liability. Elisa, you're very right. Individuals who are not VAT registered, yes, we can't offset it. But if you are VAT registered, then for example, I as a sole trader and as a freelancer, I can be VAT registered if I want to, but my accountant says that unless I'm earning a certain amount every year, I don't have to be VAT registered. So consequently, I can't deduct. But you're absolutely right. So trade, what we would say, trade customers, trade people can offset that VAT from what they're paying. So that's very, very true. I think I'm just looking at the time, and once again I have gone way beyond my 30 minutes, which I always allot to this class, allocate to this class, and you have been incredibly patient, but also incredibly participant in this class, and I'm ever so grateful, guys. Thank you so much. I do hope you found this whole discussion on tax I don't know about interesting, but engaging. Let's say it's engaging rather than interesting. Because, when you talk tax, everyone goes, tax. But for me, it's always is interesting because I think we do have to pay it, and we need to know how to talk about it. And you know, there's all sorts of ways that we can do that. And so I'm really grateful for all of you for chipping in, telling me. But I'd really be interested to know what your tax regime is all about. What it's you know, how much tax you guys have to pay. Do you think it's easy? Is it easy to calculate? Ooh, one thing I did forget and I wanted to mention is, of course, as a self-employed person, and also as employees who maybe have other assets beyond their pay, then what we have to do at the end of each tax year is we have to submit a tax return to the revenue. So we have to, you know, submit our tax returns, and that's why I have an accountant, because he or she will, you know, I send them all my receipts, they then complete the tax return. So you have to complete a tax return, submit the tax return to the tax office, and then for self-employed people, you have, well, no, not only self-employed people, everyone, we have 2 times in the year when we have to pay our tax. In the UK, for example, we have to submit our tax return by the end of January the following year. So for example, for this end of the tax year, I have to submit and pay my tax, the first tranche of my tax, by the 31st of January 2018. So you have to submit electronically. You can submit online. So it's really good. You can submit online, and there are certain deadlines when you have to do that. If you don't then pay your tax by the 31st of January, I beg your pardon, 2018, then you start paying interest on the tax that's owed. Dan, US is April the 15th. I know in Italy it's in June, because I get a number of my clients asking me for their receipts that my invoices, and then they have to, you know, submit their tax and things like that. So, you know, it's, you know, different places have different things. But so there you have it, everyone. Everything you needed to know about the UK tax system. Deferred tax. I saw someone mention that, Abu, deferred tax. I think we'll talk about that. Deferred tax is basically deferring your tax, and that has specifically to do with businesses and corporation tax. We talk about corporation tax for businesses. You have deferred tax. You're allowed to do that. Individuals don't have that flexibility. So corporation tax is a totally different situation. It's more complex. And as individuals, we also have not only income tax, we have capital gains tax. So where you've made a gain on capital you own, inheritance tax. So if you die, whatever inheritance you leave, then those are different things. You now know what I used to do before becoming a business English language trainer. A lot of tax planning, tax advice I used to give, which could be interesting, but sometimes it could be incredibly boring. But, you know, but there you go. But it's still a fascinating subject. Thank you so much to all of you. Now, as I say, if you haven't done so, don't forget to subscribe to my e-guide. Get those weekly lessons, particularly now that I'm going to be sharing audio versions of that. Now, the topic for the next session, Joy, you've just asked me this. Now, this is interesting because I was wondering, let me put this to you. I was thinking, continuing with this whole idea about finance, numbers, how about we look at how to say numbers in English? Why do I say this? Because I mentioned, you know, the tax bands. I was talking about 32,000, £1 and 150,000. Now, one of the things I did when I used to teach financial English, and I still teach financial English, is how difficult it is to understand numbers, particularly when people speak fast. And I'm talking about in the situation of financial English. Maybe you're listening to the stock market. Maybe you're listening to any numbers. If someone gives you a figure, can you understand what they're saying? So I'm going to do that. How about that? What do you think, guys? Tell me. would you like next week's topic to be about how to say numbers? And what I'm going to do is I'm going to test you. So this will also practice your listening skills. I'll give you figures and I'll ask you to write them down. And when you write them down, I can tell you whether you got it right or not. And so how about that? Shall we do that? Give me a thumbs up if that is something you're doing. Because one of the things I'm thinking about is eventually putting together a whole audiobook for you guys on financial English. All the things that you need to know about the world of finance, not specifically just about, you don't need to work in the world of finance, but just so you know what happens when we talk about interest rates, when we talk about the stock market going up and all that sort of stuff, good stuff like that. So great. Shall we do numbers next week? Brilliant. Listen, so next week, I'm looking at my calendar here. We're looking 12th of April for lesson 21 of Wednesdays with the EWAT. I do hope you'll be there just before the Easter break, and we can all share and I can test you out on all those numbers. And I'll do a mixture, telephone numbers and different numbers, and then we'll look at how we do that. So that'd be great. Anyway, thank you so much, all of you. Again, don't forget to subscribe to my blog, get those weekly lessons, and also I will be sharing also the books, and I'll be talking a bit more about business English secrets next time. So in the meantime, don't forget, I'll be sending a recording of this with the PDFs. Anyway, you take care and see you next week, which is the 12th of April. But if you are subscribed, don't forget to, I'll be sending out my weekly lesson on Friday and with the audio. So let me know, give me some feedback on that. Ciao for now, guys. This is me, Shanti Kumaraswamy Street from EWAT, English with a Twist, saying take care, speak soon, and happy English listening, speaking, reading. Do keep practicing, guys. That's the only way you're going to improve. Ciao for now. Ciao, ciao, ciao.